Question 1. Which of the following statements best describes the primary function of the Oregon Department of Consumer and Business Service (DCBS) regarding insurance? A DCBS is responsible for providing insurance coverage to consumers in Oregon. B. The DCBS regulates and enforces insurance laws, including licensing and consumer protection. C. The DCBS sets premium rates for all types of insurance in Oregon. D. The DCBS represents insurance companies in legal disputes and regulatory matters. Answer: B. Explanation. The Oregon Department of Consumer and Business Service (DCBS) is the state agency responsible for regulating the insurance industry in Oregon. It enforces the Oregon Insurance Code, including overseeing licensing for insurance professionals, ensuring consumer protection, and handling complaints. It does not provide insurance coverage, option A, set rates, option C, or represent insurers in disputes, option. This makes option B the correct answer. Question 2, scenario. Mr. Anderson is a licensed insurance agent in Oregon and is aware that his client, Mrs. Walker, has not paid her premium for the past 2 months. However, Mrs. Walker contacts Mr. Anderson and claims she never received any notice about the non-payment. What should Mr. Anderson do next according to Oregon insurance regulations? A. Mr. Anderson should immediately cancel Mrs. Walker's policy as the non-payment violates the terms of the contract. B. Mr. Anderson should confirm whether Mrs. Walker's policy has been cancelled and inform her of the necessary steps to reinstate the policy. C. Mr. Anderson should file a complaint with the Oregon Insurance Division regarding Mrs. Walker's failure to pay the premium. D. Mr. Anderson should ignore the issue as it is not responsibility to track client payments. Answer: B. Explanation. Under Oregon insurance regulations, it is the responsibility of the insurance agent to keep their clients informed about payment issues. If a client claims they were not notified about non-payment, the agent should verify if the policy was indeed cancelled and explain the proper steps for reinstatement. It is not the agent's role to cancel the policy without full review of the circumstances. Option A. Filing Option C is unnecessary unless there is broader issue, and ignoring the issue. Option D is not in compliance with the agent's duties under Oregon law. Question 3. Which of the following is a requirement for an insurance agent to renew their license in Oregon? A. Completion of a 40-hour continuing education course every year. B. Submission of a fee to the Oregon Insurance Division with no additional requirements. C. Completion of a specified number of hours of continuing education every 2 years. D. Re-examination by the Oregon Insurance Division every 2 years. Answer: C. Explanation. In Oregon, insurance agents must complete a specified number of continuing education hours as a condition for license renewal, typically every 2 years. This requirement ensures that agents remain knowledgeable about current insurance laws and practices. Option is incorrect because the C requirement is typically not 40 hours per year. Option B is incorrect because the renewal process involves more than just paying a fee. Option D is incorrect because Oregon does not require re-examination for license renewal unless there are disciplinary reasons or specific circumstances. Therefore, option C is the correct answer. Question 4. Which of the following is considered an unfair trade practice under Oregon insurance law? A. Offering a lower premium to consumers based on their marital status. B. Refusing to insure a high-risk property due to insufficient underwriting guidelines. C. Denying a claim without conducting a reasonable investigation. D. Requiring a policyholder to pay a deductible before filing a claim. Answer: C. Explanation. Under Oregon law, or 746.230, denying a claim without a reasonable investigation constitutes an unfair claims settlement practice. Insurers are required to conduct a fair and thorough investigation before denying any claims. Offering lower premiums based on marital status, option A, may be allowed if it aligns with actuarial data. Refusing to insure high-risk property, option B, is permissible if it aligns with underwriting guidelines. Requiring a deductible payment, option D, is standard practice in many policies. Therefore, option C is the correct answer. Question 5. Which of the following is true regarding the cancellation of an auto insurance policy in Oregon? A. An insurer can cancel an auto insurance policy at any time without providing a reason. B. An insurer must provide a written notice at least 10 days before cancelling for non-payment of premiums. C. Cancellation due to misrepresentation requires a 90-day notice to the insured. D. Policyholders can cancel their policy only at the policy's renewal date. Answer B. Explanation. According to OR 742.560, insurers must provide at least 10 days written notice before cancelling an auto insurance policy due to non-payment of premiums. Cancellation for other reasons, such as misrepresentation or violation of policy terms, requires different notice period. Option is incorrect because insurers cannot cancel policies arbitrarily. Option C is incorrect because cancellation due to misrepresentation typically requires shorter notice period, usually 30 days. Option D is incorrect because policyholders can cancel policy at any time, not just at renewal. Therefore, option B is the correct answer. Question 6. Scenario-based. Mrs. Jensen recently purchased a homeowner's insurance policy from Zeiss Insurance Company. 2 months later, a wildfire severely damaged her home. Mrs. Jensen files a claim, but the insurer delays the settlement process for over 60 days without providing a valid reason. Based on Oregon insurance regulations, what action can Mrs. Jensen take? A. Mrs. Jensen should wait another 30 days before contacting the Oregon Insurance Division. B. Mrs. Jensen can file a complaint with the Oregon Insurance Division for unfair claims settlement practices. C. Mrs. Jensen must prove that the wildfire damage was accidental before her claim can be processed. D. Mrs. Jensen must seek legal representation before filing any complaints. Answer B. Explanation. Under ORS 746.230, unfair claims settlement practices include delaying claims without providing a valid reason. Mrs. Jensen has the right to file a complaint with the Oregon Insurance Division if the insurer delays the claims process beyond a reasonable period. Option O is incorrect because there is no requirement to wait an additional 30 days before filing a complaint. Option C is incorrect because the insurer must investigate the cause of the damage. Option D is incorrect because legal representation is not required to file a complaint with the Oregon Insurance Division. Therefore, option B is the correct answer. Question 7. What is the maximum penalty for insurance fraud under Oregon law? A. $5,000 fine and 1 year in jail. B. $10,000 fine and 5 years in jail. C. $125,000 fine and 10 years in jail. D. $250,000 fine and 15 years in jail. Answer C. Explanation. Under Oregon law, insurance fraud is a felony offense with penalties of up to $125,000 in fines and 10 years in prison. The severity of the penalty depends on the nature and extent of the fraud. Option is incorrect as it reflects penalties for lesser misdemeanors. Option B is incorrect because the maximum fine is higher. Option D is incorrect because the penalties exceed those allowed under Oregon statutes. Therefore, option C is the correct answer. Question 8. Which of the following best describes the purpose of Oregon's workers' compensation insurance? A. To provide health insurance coverage for employees and their families. B. To offer unemployment benefits to employees who lose their jobs. C. To cover medical expenses and lost wages for employees injured on the job. D. To protect employers from lawsuits filed by injured employees. Answer C. Explanation. Oregon's workers' compensation insurance provides coverage for medical expenses and lost wages for employees who are injured on the job. It is a no-fault system, meaning employees receive benefits regardless of who is at fault for the injury. Option is incorrect because workers' compensation does not provide general health insurance. Option B is incorrect as unemployment benefits are a separate program. Option D is partially true, but the primary purpose is to compensate injured employees. Therefore, option C is the correct answer. Question 9. Which of the following is required for surplus lines brokers to operate in Oregon? A. Surplus lines brokers must be licensed in Oregon and pay premium taxes on policies. B. Surplus lines brokers can only sell policies that are available in the standard market. C. Surplus lines brokers are exempt from Oregon's licensing requirements. D. Surplus lines brokers are only required to register with the National Association of Insurance Commissioners (NAIC). Answer A. Explanation. Surplus lines brokers in Oregon must be licensed and are required to pay premium taxes on the policies they issue. Surplus lines policies are typically used when coverage is not available in the standard market. Option B is incorrect because surplus lines policies cover risks that the standard market will not insure. Option C is incorrect as brokers must be licensed. Option D is incorrect because registration with the NAIC does not replace state licensing requirements. Therefore, option A is the correct answer. Question 10. Which of the following would not be considered an unfair claims settlement practice under Oregon law? A. Failing to provide a reasonable explanation for a claim denial. B. Deliberately misrepresenting policy terms to the insured. C. Paying a claim within the time frame specified by law. D. Refusing to investigate a claim in a timely manner. Answer. C. Explanation. Paying a claim within the legally specified time frame is not considered an unfair claims settlement practice. Or 746.230 outlines various unfair practices including misrepresenting policy terms, failing to investigate claims promptly, and denying claims without a reasonable explanation. Therefore, option C is the correct answer because it describes a practice that complies with Oregon law. Question 11. Which of the following types of insurance policies is specifically regulated under Oregon's anti-rebating statutes? They life insurance policies. B. Property and casualty insurance policies. C. Health insurance policies. D. Auto insurance policies. Answer. B. Explanation. Oregon's anti-rebating laws primarily apply to property and casualty insurance policies. Rebating refers to offering an applicant portion of the agent's commission or another incentive to purchase policy, which is illegal under Oregon law. Life and health insurance have separate regulatory requirements. Therefore, option B is the correct answer. Question 12. Under Oregon law, how long must an insurance producer retain policy-related records? A. 2 years. B. 3 years. C. 5 years. D. 7 years. Answer. C. Explanation. According to Oregon administrative rules, all insurance producers must retain policy-related records for at least 5 years after the termination of the policy. This includes all relevant correspondence, applications, and claim documents. Therefore, option C is the correct answer. Question 13. What is the minimum age requirement to obtain an insurance producer license in Oregon? A. 18 years old. B. 19 years old. C. 20 years old. D. 21 years old. Answer. A. Explanation. In Oregon, the minimum age to obtain an insurance producer license is 18 years old. Applicants must also complete any pre-licensing education requirements and pass the state licensing exam. Therefore, option is the correct answer. Question 14, scenario-based. Jessica, a licensed insurance producer in Oregon, has her license revoked due to unethical behavior. How long must she wait before she can reapply for her license? A. 6 months. B. 1 year. C. 2 years. D. 5 years. Answer. D. Explanation. Under Or 744.74, if an insurance producer's license is revoked, they must wait 5 years before reapplying for new license. The Oregon Department of Consumer and Business Services enforces this regulation to ensure compliance with ethical standards. Therefore, option D is the correct answer. Question 15. In Oregon, what is the maximum fine for a producer who violates insurance laws? A. $1,000. B. $5,000. C. $10,000. D. $25,000. Answer. C. Explanation. The maximum fine for an insurance producer who violates Oregon insurance laws is $10,000 per violation. This penalty can be imposed by the Oregon Department of Consumer and Business Services. Therefore, option C is the correct answer. Question 16. Which of the following statements about Oregon's workers' compensation system is true? A. Employers are not required to provide workers' compensation coverage. B. Workers' compensation benefits are taxable. C. Oregon has no fault system for workers' compensation claims. D. Employees must prove employer negligence to receive benefits. Answer. C. Explanation. Oregon's workers' compensation system is no-fault system, meaning employees receive benefits regardless of who is at fault for the injury. Employers in Oregon are required to provide workers' compensation coverage. Workers' compensation benefits are generally non-taxable, and employees do not need to prove negligence to receive benefits. Therefore, option C is the correct answer. Question 17. What is the grace period for paying life insurance premiums under Oregon law? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer. C. Explanation. Under Oregon law, life insurance policies must include a grace period of at least 30 days for the payment of premiums. During this time, the policy remains in force even if the premium has not been paid. Therefore, option C is the correct answer. Question 18. Which of the following is a requirement for foreign insurers to do business in Oregon? A. They must have their headquarters in Oregon. B. They must be licensed in all 50 states. C. They must be authorized by the Oregon Department of Consumer and Business Services. D. They must pay a flat annual fee to operate in Oregon. Answer C. Explanation. A foreign insurer, an insurer based outside Oregon but within the United States, must be authorized by the Oregon Department of Consumer and Business Services to do business in the state. They must also meet specific financial and regulatory requirements. Therefore, option C is the correct answer. Question 19. What is the required continuing education for an insurance producer in Oregon? A. 12 hours every 2 years. B. 24 hours every 2 years. C. 30 hours every 2 years. D. 36 hours every 2 years. Answer B. Explanation. In Oregon, licensed insurance producers must complete 24 hours of continuing education every 2 years, including 3 hours of ethics training. This requirement ensures producers stay up to date on industry regulations and practices. Therefore, option B is the correct answer. Question 20. Which of the following best describes a domestic insurer in Oregon? A. An insurer that only operates in Oregon. B. An insurer that is incorporated in Oregon. C. An insurer that is licensed to do business in Oregon, but based in another state. D. An insurer that provides only auto and homeowners insurance. Answer B. Explanation. A domestic insurer is an insurance company that is incorporated in Oregon. Foreign insurers are incorporated in another state but authorized to do business in Oregon. Alien insurers are incorporated outside the United States. Therefore, option B is the correct answer. Question 21. In Oregon, which of the following must be included in an insurance policy issued in the state? A. The agent's personal information. B. A provision stating the insurer's right to cancel the policy. C. The insured's employment history. D. A list of previous claims made by the insured. Answer B. Explanation. Oregon law requires that insurance policies include provisions outlining the insurer's right to cancel the policy and the process for doing so. This ensures transparency and protects both parties in the contract. Therefore, option B is the correct answer. Question 22. What is the maximum penalty that the Oregon Department of Consumer and Business Services can impose on an insurer for each violation of state insurance regulations? A. $5,000. B. $10,000. C. $25,000. D. $50,000. Answer D. Explanation. Under OR 731.988, the maximum penalty for insurers violating Oregon insurance regulations is $50,000 per violation. This significant penalty ensures compliance with state laws. Therefore, option D is the correct answer. Question 23, scenario-based. An Oregon resident files a claim for water damage caused by a broken pipe. The homeowner's policy excludes coverage for water damage due to flooding but is silent on damage from broken pipes. How should the insurer handle this claim? A. Deny the claim based on the flood exclusion. B. Deny the claim since the policy is silent. C. Cover the claim because broken pipes are not excluded. D. Investigate further to determine the cause of the damage. Answer C. Explanation. If a policy is silent on a specific type of damage, the insurer cannot deny the claim based on an exclusion that doesn't apply. Since the policy specifically excludes flooding but doesn't mention broken pipes, the claim should be covered. Therefore, option C is the correct answer. Question 24. How many days does an Oregon insurer have to acknowledge receipt of a claim? A. 7 days. B. 14 days. C. 21 days. D. 30 days. Answer B. Explanation. Under Oregon law, insurers must acknowledge receipt of a claim within 14 days. This timeline ensures prompt communication and responsiveness to policyholders. Therefore, option B is the correct answer. Question 25. Which of the following is not a valid reason for an insurer to cancel an auto insurance policy in Oregon? A. The insured failed to pay premiums. B. The insured made multiple claims. C. The insured's driver's license was revoked. D. The insured committed fraud. Answer B. Explanation. Under Oregon law, insurers cannot cancel auto policies simply because of multiple claims. Valid reasons for cancellation include non-payment of premiums, license revocation, or fraud. Therefore, option B is the correct answer. Question 26. What is the free look period for life insurance policies in Oregon? A. 10 days, B. 15 days, C. 20 days, D. 30 days. Answer D. Explanation. In Oregon, the free look period for life insurance policies is 30 days. During this time, policyholders could review the policy and cancel for a full refund if they choose to do so. Therefore, option D is the correct answer. Question 27, scenario-based. Mark, a licensed producer in Oregon, is approached by a client who wants to purchase a homeowner's policy. During the application process, the client knowingly provides false information about the age of the home. Mark suspects fraud but proceeds with the application anyway. What are the consequences for Mark? A. Mark will face no consequences as he is not responsible for the client's actions. B. Mark could face disciplinary action for knowingly participating in fraud. C. Mark will have his license automatically revoked. D. Mark can continue to sell policies as long as no claims are made. Answer B. Explanation. In Oregon, insurance producers have a legal obligation to report and avoid participating in fraudulent activities. If a producer knowingly assists a client in committing fraud, they may face disciplinary actions, including fines or license suspension. Therefore, option B is the correct answer. Question 28. Under Oregon law, what is the minimum liability coverage required for auto insurance? A. $15,000, $30,000, and $1,000. B. $25,000, $50,000, $20,000. C. $50,000, $100,000, $25,000. D. $100,000, $300,000, $50,000. Answer B. Explanation. Oregon requires a minimum auto liability coverage of $25,000 per person, $50,000 per accident, and $20,000 for property damage. These limits are commonly referred to as 25, 50, 20. Therefore, option B is the correct answer. Question 29. How long does an insurer have to complete a claim investigation under Oregon law? A. 30 days, B. 45 days, C. 60 days, D. 90 days. Answer C. Explanation. Under Oregon revised statutes, insurers must complete their claim investigations within 60 days unless more time is needed and justified. Therefore, option C is the correct answer. Question 30. What is the maximum time limit for a policyholder to file a lawsuit against an insurer after a claim denial in Oregon? A. 6 months, B. 1 year, C. 2 years, D. 3 years. Answer D. Explanation. Oregon law typically allows a maximum of 3 years for a policyholder to file a lawsuit against an insurer after a claim denial. This statute of limitations applies unless otherwise specified in the policy. Therefore, option D is the correct answer.